Marksman Capital presents.
Right, folks, been some time since I've done some videos, and this is the chapter where we go to how do I screen some strong fundamental stocks in less than 15 minutes. So here, okay, disclaimer. Right, so what are we looking at? And in the US, they have about 8,000 stock listed, and we want to find the stocks that are less than 1% in the entire market, and those are the great stocks. They actually help you to outperform the benchmark S&P 500 when the market is bullish. And of course, you don't have to own a few hundred stocks. You just have to own maybe less than 30 stocks, 20 to 30 stocks in your portfolio. But even for the first year, you could own about 10. Then second year 20, third year 30, slowly picking up and balancing the portfolio. So now, of course, there are 6 steps here that I actually take. And these are the steps that help me to have a very strict guideline for investment. But of course, it's not always science, it's also an art as well. But there are some strong fundamental stocks which, we need to bend a bit of the rules. All right, slightly bend, especially on step number 5. It's not all the company financial health they have, the debt to equity ratios that is less than 0.5. So like step 1 is one of the most important step. If it doesn't pass step 1, consistent revenue growth or consistent net margins and cash flow, and even price trends, it doesn't go into step 2. So step 2, I would use loosely also as well. Future growth projections are done by analysts, and sometimes if they really want to do a strong projection or a weak projection, it can be manipulated somehow. So step 3, it has to have growing margins and every year is growing and cash flow, sustainable, all right, together with the revenues. But sometimes even for 1 or 2 years, like Microsoft, it goes into slight decline and recover after 2 years. So even some strong fundamental stocks, sometimes the margin could hurt 1 or 2 years later, and after that, the years after that, it starts to grow again because it has step number 4, wide economic mode. That means also high entry barriers, sticky business. It has competitive advantage and also a network effect. But of course, that's quite a lot. Step 4 is one of the most challenging step to learn about because there are a few examples that I showed earlier in some of my videos how I qualify those stocks as a wide economic mode. And if we talk about step number 5, we look at the prism. It's like a crystal prism. It's looked into a few 4 angles at least to know if it has a very conservative depth structure. And step number 6, valuation. It's where we use intrinsic value or discounted cash flow models to evaluate whether it's undervalued or fair, it's near a fair price or not. Right. So step 1 and step 6 is quite closely related. I always use step 1 price trends as an overlay for the strong fundamental businesses. All right, so this is the screener that I use, and slowly we'll go into that because you can see quite a lot of tabs over there. And some of the companies that I get to qualify is around 60 companies or less that has strong fundamental businesses. Right, it's not just all in US, some of that in China also as well. Of course, most of us know that China is facing quite a strong weak economic moments. All right, some of the strong fundamental stocks are quite beaten down right now. Okay, and if we look at strong fundamental stocks, they do have very strong capital gains over years of time, and this is like a 10 years time. And sometimes they're categorized in monopolies or duopolies. Okay, so now of course, now you want to see how I do it in the screener is that now first of all we go to step 1, sales growth for the past 5 years. It has to be positive. Now, before I even start at this screener, see, before, let's say anything, if you look here, it's about 9,500 foreign stocks, right, listed in this screener right here. It's a free screener, and anyway, you get a lot of advertisement of that. Of course, it's quite annoying. And of course, this is first is about the sales growth has to be positive. Then the projection has to be positive on the earnings. EPS known over here. The EPS growth for the past 5 years also has to be positive. Then you can see that just now was about 8,000 stocks. I just did a few selection right here. It drills down about 90%, sorry, 80% of the stocks. Now we are narrowing down to 1,200 stocks around. And EPS growth for this year, yeah, maybe we can put positive. Quarter to quarter, I'll just leave it at any at the moment. EPS growth projection next year would be positive. Then I want to see debt to equity, not now, not that important. Current ratio has to be over 1, right? But Amazon is the only one that doesn't have a current ratio more than 1 at the moment, right? Okay, net margin has to be over 5%. Then the return on equity over 10%, right? Is how much money they can make on, it's how good the company can make money when you have equities or investment inside. Okay, sales growth quarter. Now, where are we now? We're down to 221 stocks. So that's about more than 90% of the stocks are reduced, narrowed down. So you can see stocks like Adobe, familiar ones, right? Adobe, let's see, ASML, strong one. AVGO, Broadcom, strong ones. Alibaba, BKNG, some people invest in it. I don't really like it, but yeah, somehow it's here. Then you can see, okay, as we go down to the screener, CDNS, considered great business. Copad, all right. Then, okay, of course, this is quite mechanical, chip portal. This screener is quite mechanical, I would say. Not all the strong fundamental stocks are shown in here, but at least they do qualify some of the steps that I have actually, filtered right here. Okay, then let's see what do we have here. FT. Let's see if they have this. FT&T is here. Google is here. Strong business. Okay. Then HEI, IDEX, into ISRG, Intuitive Surgical, which is a great business. Okay, won't dive into that right now. Meta, Mercado Libre. Let's see if they have MasterCard. MasterCard. Yeah, okay, they have MasterCard right here. Common ones, right? Or MCO, Moody's right there. Okay, let's see. Nike's there. Netflix. Okay, but has a lot of competition. Didn't really dive deep into that. Number 9. Yeah. Okay, let's see what we have. Familiar names? Yeah. Okay. So, okay, tracks. Let's see. Tesla's not inside. Let's see if Tesla is inside. Nope. Alta, VEEV, Visa, VRTX. Somebody asked me about VRTX, but I didn't really deep dive into that. WD-40, household item. Okay, Yums China is okay, considered great consumer staples. Zoetis. Okay, so only some part of the portfolio I would say that it is mentioned in here, and you could see duopolies like IC and CME was not mentioned as well. So now let's say if we just randomly pick one, let's say now names that, okay, maybe now let's pick one, maybe okay, of course we know Adobe is a strong one. Okay, Adobe. Sometimes okay, I look at price charts. Okay, if it's consistently moving upwards, over time, it should be fine to invest in it, right? Of course, these are the stocks that I've analyzed before, and you can see the price trends is pretty much consistent, right? So, before and after subprime, okay, there's some differences. Okay, but after I screen that, I put some of that in my oops in my watch list right here. So this is where I build up my watch list from the screener. Okay, so well, that's less than 50 minutes to to narrow down to the stocks that I want to invest. And of course, usually I like the stocks in US, so that goes down below 200 in total. All right. So maybe okay, you can press one ANSS. Let's see. Now, sometimes I of course look at Wall Street, simply Wall Street, which is also a screener, and I get to look at more of the fundamentals here. Sometimes I look at Morningstar, right, to see whether it has consistent revenues, net profit margin increase, and cash flow from operation. All right. So it's pretty complete with this, just to make sure everything's in check. All right. So yep, that's how I do it. And of course, there are more. Of course, there are more of the art to identify more. Right. Then I would say happy trading and investing. Striker X here signing out. If you like this video, please hit the subscribe and like button, and also notification button if you like to get more of these videos. And we also have a Facebook group where we're reading, and we will provide the link below in the description column.